Ever feel like you're just drowning in information sometimes?
Yeah.
Especially with these really dense financial reports.
Oh, absolutely. Or trying to figure out big industry shifts.
Exactly. Imagine if someone could just cut through all that noise,
Yeah.
find the real story, the surprising bits, and tell you what it actually means.
Well, that's the plan today.
That's exactly what we're doing today on the Deep Dive. So you've brought us some really interesting stuff. NXP Semiconductors Q2 2025 earnings call transcript and their results press release.
That's right, NXP.
And our mission today is basically to unpack NXP's latest performance, their outlook, but maybe more importantly, what signals are they seeing? Things that might indicate a really big shift happening in the whole semiconductor industry.
Yeah, we're looking for those aha moments.
Right. The takeaways that leave you feeling like, okay, I actually get this now.
And what's really fascinating here, I think, is that NXP's report, it isn't just numbers. It kind of paints this picture of an emerging cyclical improvement, like a new upcycle maybe starting to materialize.
An upcycle. Okay.
Yeah, and they're tracking very specific signals that seem to back up this confidence. And that's quite a shift, really, from just, say, 90 days ago.
Okay, let's unpack that.
Boy.
So NXP reported Q2 revenue of $2.93 billion. That was above the midpoint of their guidance.
Mm-hmm. Pretty solid.
And their non-GAAP operating margin was 32%. Just for clarity, that margin, it kind of shows their core operational profit before certain accounting things, right? Gives a clearer view of the day-to-day business health.
Exactly. It cuts out some of the noise.
So when they talk about this shift, this potential upcycle,
Yeah.
what specific signals are they actually seeing? What makes them confident?
Okay, so if we try and connect this to the bigger picture, their confidence seems rooted in 4 specific measurable signals, things they watch constantly.
4 signals. Okay.
And they said there's been a clear improvement on all 4 just in the last 90 days.
Wow. Okay, what are they?
So first, they're seeing their customer backlog levels growing continuously, especially with their distributors.
Right, more orders piling up.
Second, improved order signals coming from their direct customers, too. Third, an increase in what they call short cycle orders, quick turnaround demands. And fourth, and this one's interesting, increasing product shortages, which leads to more customer escalations. They actually said those have almost doubled over the last 90 days.
Doubled. Wow. Okay, that is interesting. Increasing shortages and escalations. Sounds like a good problem to have if you're NXP. Maybe.
Maybe. But it raises a good question, right? Like, have we seen signals like this before that turned out to be, I don't know, a head fake? Maybe just temporary supply chain glitches or customers double ordering out of panic?
Exactly. What makes this time feel different for them? Why the confidence now?
That's a really sharp question. And the CEO actually addressed it. He said 90 days ago, there was this sort of balance of uncertainty. You had tariffs causing worry, plus some, early signals.
Okay, so uncertainty was higher then.
Right. Now, he's saying while tariffs are still out there creating some uncertainty, the actual signals for this new upcycle, they've strengthened.
Strengthened how? Just volume or?
It seems like it's the combination and the strength, especially that doubling of escalations due to real product shortages. That's often seen as a classic sign, a bellwether.
Okay.
It suggests the market is genuinely, starved for product. Not just a little bump, but something more fundamental in demand strengthening. Stronger than just typical seasonal stuff.
Gotcha. Okay, that makes sense. So let's dig into their guidance then. For Q3 2025, they're projecting revenue of $3.15 billion. That's an 8% sequential jump.
Yeah, quite a jump.
And they called it a return to better than historic seasonal trends. So how do the different parts of their business, their market segments, play into this?
Well, this matters a lot for understanding the broader industry because NXP's markets are like a window. Automotive is their biggest piece.
Right. Automotive.
It's expected to be flat compared to last year on year, but importantly, up mid-single digits just from Q2, sequentially.
Okay, so accelerating within the year.
Exactly. That acceleration is really the crucial part here.
But what's driving that growth in automotive? Especially when we keep hearing the overall auto market macro is, kind of mixed. Are car sales suddenly booming?
See, that's where the interesting detail is. It's not necessarily about a huge surge in overall car sales. Like the SAAR forecast, that's the annual rate of car sales, only ticked up slightly from maybe 88 million cars to 90 million for the year. Not a massive jump.
Okay, so it's not just more cars being sold.
Yeah.
Then what is it?
The key dynamic, according to NXP, is that they're Western Tier 1 customers, so The big suppliers feeding the car makers are getting back to normal inventory levels, or they're already there.
The inventory story again.
Right. This whole inventory burn where customers used up existing stock instead of ordering new chips, that held NXP back for quite a while.
For multiple quarters, yeah.
But now that's easing off, or as they put it, going away. So NXP can ship closer to the actual end demand from car buyers.
I see. So they can grow even if the overall car market isn't, like, dramatically improving.
Precisely. Now, China's a bit different. They said China's been strong all along, especially through distribution channels. And NXP's own inventory levels there are actually still below target.
Interesting. And China's big on EVs and new tech, right?
Exactly. That OEM-driven market there is really pushing innovation in software-defined vehicles, SDVs.
Okay, SDVs, software-defined vehicles.
Mm-hmm.
This feels like more than just chips for the radio. What does this shift actually mean for cars, for us?
Oh, it's a huge shift. This SDV concept, it's really accelerating everywhere because it offers, real consumer value.
How so?
Well, imagine your car getting better over time with software updates. Like your phone, it doesn't really age in the same way.
Ah, okay. Like getting new features after you buy it.
Exactly, and for the manufacturers, it makes designs more versatile and cheaper in the long run. NXP sees it as a must-do for Western car makers now, especially to compete with the fast-moving Chinese companies.
So NXP's tech is key here.
Absolutely. Their S32 processor family, their Ethernet stuff for connectivity, and that company they just bought, TT Tech Auto, that's all central to making SDVs happen.
TT Auto, right. We'll come back to that.
And they also announced a new radar processor, the S32R47, specifically for autonomous driving features.
Okay. And electrification. Still rolling.
Definitely. S&P is forecasting 15% more electrified vehicles, xEVs. That includes hybrids and full EVs this year compared to last. They think it'll hit like 43% global penetration by the end of the year.
43%. Wow. Okay, what about their other segments? Industrial and IoT.
Yeah, industrial and IoT, that's expected to be up mid-single digits year on year and actually high single digits just from Q2. So good sequential growth there, too.
And what's driving that? Specific areas?
They describe the recovery as pretty broad-based globally across both like core industrial stuff and consumer IoT gadgets. And they mentioned seeing real engagement around high-performance AI capabilities there, too. That's a definite growth area.
AI everywhere. Okay. Mobile.
Mobile's interesting, up only low single digits compared to last year, but sequentially, up mid-20%. Big jump from Q2.
Mid-20s. Okay. And the last one, comm infrastructure.
Communication infrastructure and other. That one's expected to be down year on year, but flat compared to Q2. So stable sequentially, but still lagging year over year.
Okay, so a bit of a mixed bag across the segments, but the big ones, auto and industrial, are showing sequential strength.
Right, and that sequential growth is really underpinning that overall 8% jump they're guiding for.
Makes sense. Now, beyond the markets, NXP really seemed to emphasize their financial discipline, particularly inventory.
Mm-hmm. Very much so.
Their distribution channel inventory is still at 9 weeks. That's below their long-term target of 11 weeks.
Right, they've been holding it tight.
But they did mention maybe selectively increasing it for certain hero products if this recovery really takes hold. It sounds like they're walking a tightrope almost, being careful.
Yeah, like playing Jenga with inventory, as you said. It's a very cautious approach, isn't it? Especially if they truly believe an upcycle is starting.
So what's the thinking there? Why not stock up more aggressively?
Well, that 11-week target, that's their pre-COVID normal. They apparently reassessed it completely, bottom up, and they've been incredibly disciplined about not letting things like potential tariffs cause weird ordering patterns.
Like customers ordering early just in case. Pull-ins.
Exactly. Or pushing orders out. They even said they use AI now to monitor order patterns for that kind of stuff.
Wow. AI for inventory management.
Yeah. And they reported no material pull-ins or push-outs related to tariffs in Q2. And they don't expect any for Q3 either.
So discipline helps them stay lean but ready.
Seems to be the strategy. Keep inventory tight, avoid artificial bumps, but be ready to ramp up on key products if needed.
Okay. Now, something that really jumped out at me was about their acquisitions. You mentioned TT Tech Auto.
Yes, they closed that deal in June.
Right. And they've got Canara and Avivalinks potentially closing soon, too. But the comment on TT Tech Auto, they said its revenue contribution is completely immaterial.
Yeah, pretty blunt.
Even though it adds 1,100 software engineers. So they're spending money adding headcount for basically zero immediate revenue. What's the strategic play there? It feels odd for a chip company.
You've absolutely hit on a key point there. It really shows their strategy looking forward. While the revenue from TTTech Auto now is tiny for NXP,
Immaterial, yeah.
they bought them specifically for their IP and know-how in software, particularly for safe processing in these software-defined vehicles.
So it's a capability purchase, not a revenue purchase.
Exactly. They're basically shifting TTTech Auto away from just being a service provider. They want it to be an integral element of NXP's whole SDV system solution package.
So NXP sells the chips and the core safety software together.
That seems to be the goal. The financial impact right now is mostly on the operating expense side, more costs. But NXP says they basically absorbed that by cutting back on other, less strategic projects.
So a big strategic bet on software integration for cars.
A massive pivot, really. Investing heavily in software to help traditional car makers bridge that SDV gap. And those other deals, Kinara and Aviva Links, close. That's another, $550 million in cash, but going out for AI processing and high-speed data tech.
So more capability building blocks.
Seems like it. They also talked a bit about their manufacturing strategy, this hybrid approach.
Right, consolidating older factories.
Yeah, consolidating some legacy 200-millimeter front-end fabs. Those
Yeah.
are the older, smaller wafer plants, streamlining production, cutting costs.
Makes sense.
But interestingly, this will lead to higher internal inventory. They expect to have about 6 or 7 days of pre-built stock, basically finished dies, the raw chips ready by the end of the year.
Why do that if they're keeping channel inventory lean?
To improve supply resilience, basically. Have a buffer internally so they can respond faster and avoid the kind of crises we saw a few years ago. Their own factory utilization rates are already up, too, into the mid-70% range in Q2.
Okay, so internal buffer, external leanness. Got it.
Yeah.
So pulling this all together, what's the bottom line for NXP's financial health, their profitability outlook?
Well, they seem very focused on, solid profitability, hitting the targets in their long-term model.
Consistent performance.
Right. They even gave a rule of thumb for gross margin. For every extra $1 billion in revenue, they expect about 100 basis points, so 1 percentage point of extra gross margin over a full year.
Okay, clear target.
Yeah, and they're aiming for that long-term range of 57% to 63% gross margin. Plus, they're targeting operating expenses at 23% of revenue for the second half of this year. So keeping costs in check even while making these big strategic software bets.
So discipline alongside the strategic investments. Okay, so thinking about this whole picture for you, the listener, how does NXP's strategy maybe change how you see the semiconductor world? We went from these dense numbers
Lots of figures.
to hopefully a clearer picture of how NXP is trying to navigate this emerging upcycle, managing inventory super carefully, making these targeted acquisitions for growth like SDVs, tweaking their manufacturing.
And this deep dive, I think it really shows that these shifts in the semiconductor industry, things driven by car tech, industrial AI, it's not just about raw numbers or making chips faster anymore.
Right. It's more complex.
It seems to be much more about strategic foresight, being adaptable, and crucially, spotting those key signals of change before the whole market turns.
Which brings up maybe a final question for you to think about.
Mm-hmm.
As chip companies like NXP focus more and more on software, on system solutions, not just the hardware, how might that fundamentally change things?
Yeah, how does it change how whole industries innovate? Or even just how we as consumers interact with technology every day? Your car, your home.
It feels like a pretty big shift.
The future, it really seems, isn't just about faster chips. It's about these smarter, more integrated systems that really redefine what's actually possible.
Lots to think about there. Keep learning, keep questioning, and definitely join us next time for another deep dive.